What if somebody else builds a store for you and invites you to own it for free? It doesn't matter if you do not have a product, a startup capital, or business experience. Purpose Black works best for you. Purpose Black is a multi-vendor marketplace where you can sell your products and services worldwide. Are you in Africa, USA, or somewhere else? Purpose Black is right there. Make money while enjoying maximum flexibility in your work life. You can be the best of yourself. The best thing, it is free. Who can say no to this opportunity? There is more. You can get unlimited training related to your business and support. So, what are you waiting for? What you need to do is just go to www.purposeblack.com and register as a seller today.
This is Purpose Black Marketplace.
Yeah. You already know what this is. Look, it's launch taking off like a boss. Purpose Black Marketplace, headed to the top. Creating the next black millionaires round the globe. Come through and watch as we grow. And support the cause, cause we in it to win it. Let's put our peoples in the cockpit. Switching the situation to black people around the world. We gon' make a change and send it for the world. Cause we got more than what it takes. But ain't no time to waste. This is more than a race. This Purpose Black Marketplace. Yeah.
We take it to the next level, yeah. Cause we doing our thing. Changes what we bring for the kings and the queens. So come hop up into the mix. Come with us on a trip. Cause you know just what it is. Purpose Black Marketplace.
Black Economy Excellence is proud to announce the establishment of the Global Center for Diversity and Inclusion. Now more than ever, corporations, nonprofits, and governmental entities recognize the urgent call for a better world, where equality and equity aren't just theories we discuss, but practices embraced throughout organizations from top to bottom. As a premier center for diversity and inclusion, our mission is to provide the tools, training, and knowledge that will empower organizations through webinars, research, conventions, publications, and networking to achieve their diversity and inclusion goals. As part of the B Initiative's Corporate Partners for B program, we invite you to take an active role as a corporate partner or sponsor to contribute to the success of our mission. Help us to keep momentum going as we strive to bring this critical change to the world with a solution that we can all be a part of. Join us. It's time to turn good words into powerful actions that reflect this unifying goal. Become a part of the Global Center for Diversity and Inclusion today.
Hello, everyone. Thank you for joining us. My name is Wasendir Dao. I am the Director of Global Center for Diversity and Inclusion Department under the great company called Black Economy Excellence. Black Economy Excellence is a company that initiates Purpose Black, a new e-commerce platform to fulfill one of its biggest targets with the aim of creating 1 million Black millionaires in the next 10 years. It's my pleasure to welcome you all to this, our weekly webinar that is organized by our department on the topic, the fundamentals of state and local tax in the US. For those of you who want to watch our previous webinars, you can get them on our YouTube channel named Black Economy Excellence. If you like us, please subscribe and share to others. We have invited a special trainer for today, Mr. Theodoros Tesama. Just on housekeeping before we get started, if you have any questions during the presentation, please type them into the question box in your Zoom control panel. I will bring them up during the presentation and we will have time for the answers at the end. I am privileged to announce that Dr. Faisal Abtamariam, our CEO, is here with us today. Just to mention a few things about him, the Black Economy Excellence Initiative founder and CEO, Dr. Faisal Abtamariam, is a passionate educator, social entrepreneur, civil rights advocate, and researcher with 25 plus years of distinguished academics and business careers. He is well known for creating numerous businesses that have a profound social and economic impact. Dr. Faisal founded the first and largest prestigious accredited private university named Unity in Ethiopia. At its peak, Unity University offered education services to more than 12,000 students. Because of his strong belief in the economic and social impact of education, he launched the Girls Education Project and personally gave free scholarships to more than 5,000 girls from economically disadvantaged families. Thank you for your presence, Doctor. Now, let me direct you to our today's presenter, Mr. Theodoros Tesama, a CPA, CGFM, is a partner at the Bridge CPS, specialized in tax consulting, tax preparation, and government accounting. He has over 15 years of demonstrated history of working in the local government administration and over 5 years of working in the tax industry, helping individuals and small businesses. He is a licensed certified public accountant and certified government finance manager. So I will let Mr. Tedros to take the floor. Please, Teddy.
Thank you, Hassan, for your kind introduction. Thank you, Dr. Faisal, for creating a platform like this and for your presence. Welcome, everyone. Thank you for the chance to talk about state and local taxes in the United States. Now I'm going to turn my camera off and go to the content of today's discussion. Okay, I'm going to share my screen now. Okay, in the United States, we have 3 levels of government which given collecting taxes from individuals and businesses. Today, we're going to cover state and local taxes, which mostly collect taxes from sales, property, and other different tax in the United States. From the total collection of tax in the United States, about 20% is collected by states and 13% is collected by local governments. My agenda today is just to briefly give what state and local taxes are and why they matter, the difference between sales and use tax, and the history of sales tax in the US, and like exclusions, exemptions. We change gear and we concentrate on sales tax, about Nexus, remote sellers, marketplace providers, and solutions like how to streamline between different states, and how we manage sales tax, and what common mistakes, and how we're gonna make sales tax automated. As I say, governments collect tax. The federal government is the one retain the right to impose taxes, and when federal government is not collecting, the states are collecting, allowed to collect tax according to the US Constitution. State taxes collect personal income taxes, like when we are an employee, we pay our taxes, corporate taxes, property taxes, and sales tax. And there are other taxes also, like fuel tax, inheritance, state tax. State sales tax is a significant source of income for states. That's why it's important, because they want to enforce this. They're going to come after us, auditing us, make sure we comply with their rules and regulations. So to show how this tax is very important, in 2018, they collect about 1.031 trillion taxes. There are about 45 states, including, in addition to District of Columbia, collect sales tax. About 44 states on corporate income, net income tax, and about 13 states impose corporate capital stock tax. Sales tax is levied on the sale of goods and services. Some states tax services, not all of them, but 45 of them collect tax on the sale from goods. So they are collecting these taxes from our customers, and then we pass it through to the state. Mostly when we buy something, we pay sales tax. So what is sales tax? Sales tax is, as I say, it's collected by the gross receipt of the sale. And there is also another tax, which is a use tax, which is similar to sales tax. It is imposed on the storage, use, or purchase of properties. It is a complementary tax. Usually manufacturers use their property for their own purpose, and this is called, the tax they pay is called use tax. We're gonna cover this a little bit more in the next slide. State taxes started in the United States in 1930. After the Great Depression, all the states tried to look to cover their expenses and to cover social services like, police, fire, housing, emergency medical services, courts, sewer, snow removal. All this is being done by taxes, so they have to look for additional income, so they start collecting sales tax. The only states right now which are not collect sales taxes: New Hampshire, Oregon, Montana, Alaska, and Delaware. However, Alaska, they have a local sales tax. Local means cities, municipalities, counties. These taxes plus the state taxes added together and is charged from our customers as a sales tax. Now let's see, when we start sales tax from different states, they didn't start all together. Some states start early, some states start late. As I say earlier, about 5 states out of those 45, out of those 50, they are not collecting tax. They are called nomad states. So state and sales tax is about 47% of total state revenue. Roughly, there are 10 to 12,000 jurisdictions throughout the United States. So now we start seeing the complication. We are not dealing with one state. When we sell across the board, across the border, we have to deal with another state's rules and regulations, statutes. So this data is from 2017. It's from the Census Bureau. It shows that the total sales tax is collected 30.5% from general sales and gross receipts, and 16.6 is from selective sales taxes. So total is about 47%. So now we can appreciate how the states are really serious about this, because that is their mainstream income. So what is the purpose of sales tax? Why did they collect? The first purpose is to raise revenue. As I said earlier, they try to cover their expenses, so they have to impose taxes to raise revenue. The second is for economic, social, equitable considerations. Some of them are to encourage activity, some to discourage an activity. When we say economic consideration, for example, if you make an investment in machinery in a manufacturing setting, they give you a reduced rate instead of charging you the full sales tax. So the rates are different by product. Now we have 45 states. Now we have different rates for different items. Just we start looking the complication. The other one is social considerations. So we have to give some non-profit charitable religious institutions, we're going to give them exemption. Now, another complication, we have to exempt, we have to certify that they are actually exempted first. Secondly, we have to have two different set of sales. One for profit agencies, the other one is for non-profits, for profit businesses and for non-profits. The other one is for equitable consideration. Some states, they give an exemption for food, medicine, and now we see some of our sales, our product has to be taxed, some of them are not. And this is different from a state, from one state to the other. Some states they tax food, some they are not. Some they actually charge in a reduced rate, some they actually charge the full rate. So the complication from collecting sales taxes, it just gets bigger and bigger. Now we see different states, they have different rates here. All of them have different rates. The highest rate is Tennessee, about 9.47%. And the lowest is Alaska, because Alaska doesn't collect sales tax. It is number 47. It's about 1.43%. So different sales tax rate from one state to the other. And in addition to that, these are 45 states. From one locality to the other locality inside one state, it's going to be different. For example, in my home state, Virginia, there are places like in the Northern Virginia, it's about 6%. In other areas, it's about 5.3%. So the rate is different from one state to the other. Now, let's see what is the nature of sales tax and what is its purpose. As I said earlier, sales tax is collected by gross basis tax imposed on the retail sale. That means when you remit your taxes, when you report your taxes, you have to report everything. Even if you don't charge tax, you have to gross sales is the basis of your reporting for your sale. The other thing is most of places, they only charge sales tax for tangible goods. There are some intangible goods we see later. Some of them collect tax on them, some of them they are not. So it's on end user customers, it's not for wholesale. They are actually exempted, but we need to have an exemption. We have to make sure they are actually using these products for resale purposes. And when we have exempt sales, we need to require documentation to make sure their status is exempt. Exempt certificate is a principal document to give that exemption. So that's one thing. The other is services. Probably this is not an issue in this setting. Probably we have to look in e-commerce mostly, but just to highlight some states tax services, but otherwise they're non-taxable. Okay. Intangibles like stocks, bonds, and copyrights, they are not subject to taxes unless by the state statute it is provided. But in a general sense, they are not taxed for sales tax. So real estate is not subject to sales tax or use tax. There is the property tax. That's another thing. Different vendors charge different sales or use tax. Not licensed to collect. If you are not licensed to collect, some of them are licensed, some of them are not licensed. So they don't charge if you are not provided a license to do business in this state, you are not allowed to collect. So no nexus in the state. Nexus is a big issue here. I'm gonna make a definition later, but just for now, if you don't have nexus, you don't pay taxes. Earlier, we already explained exemption. So let's go to the next one, receipt of exemption certificate. If you have an exemption certificate, you are not paying taxes. And some purchase orders marked non-taxable. So that's not non-taxable in this setting. So the next thing, earlier, as I said, there are exclusions, there are exemptions. Certain groups like charitable, religious, education groups are excused from paying taxes. That is by nature, what kind of business they are in. The second one is exclusion by product. Food, some food, when I say food, food which is used at home. If you are in a restaurant setting, you're paying actually higher taxes. Clothing, some medicines, prescription and prescription, newspaper, utility, these some consider food like necessity, some don't. So it depends from state to state. Now I'm going to give a little example how sales taxes actually affect from one state to the other. Let's say you have a retail store, a brick and mortar store. People are coming to your store, buying stuff. You charge them the rate where your business is located. That is very easy. You collect on some items, you don't collect on the other. So now a buyer in state of Texas is buying items in the state of Texas, shipped from Texas. Now it's very easy. The seller charges sales tax from buyer, collect the sales tax. I mean, the seller collects the sales tax from buyer and remit to the state. The second example, when buyer purchase item in Texas, but the seller shipped the item from California. Now in this case, they have nexus. Nexus means cross-border transaction. So the seller right now have an economic interest in state of Texas, even if the goods are sold from California. So in this case, the seller actually use tax obligation and it's collected from the buyer. So the seller is responsible to collect taxes. The third situation, when the buyer actually purchased the item in Texas and the sale is shipped from California, but when they don't have nexus. As I said earlier, nexus is a big issue. We're gonna actually make a definition of it, but for now, which means the seller in California doesn't have any interest in the state of Texas. Let's assume a couple of things, just an assumption. The buyer, he mailed it from through regular mail, UPS or UPS or other mailing situations. And in this case, the seller is located in California, so there is no any connection. The buyer actually bought the product and get it. Or let's assume the buyer actually sent his own truck and take the item from California, so there is no any connection. So the seller doesn't have any responsibility to collect taxes, but the buyer has a use sales tax obligation. So the use sales tax coming here, which tells the buyer is responsible. When the seller is not responsible to collect taxes, still the buyer is responsible. Some states require actually the seller to report the sale. Some of them require the buyer self-report and remit taxes. This is just to give a highlight. So now let's see what Nexus and physical presence is. Let's first look physical presence. If you are located in the state of Texas, and if you have agents in the state of California, in the state of Virginia, in the state of Alaska, now you have business physical locations presence in these different states. So physical presence is not only having an office in a business, it might be holding property, it might be employing individuals. So physical presence is created by employees, independent contractors, or ownership or leasing of property in the state. If you have an office, you are physically present in that office. So let's see, how much of a physical presence is sufficient to create Nexus, which means how much of the seller we see earlier in California, how much of Nexus he have, how much of relationship he have with the state of Texas. That also matters. If you have occasional sporadic visits, probably you don't need to. Some states define that differently. For example, if you attending a trade show in that state, in the state of Texas, some of the states require you even to collect taxes for if you stay more than this much days. If you collect this much amount of tax, a sale, then you have to remit taxes. So any connection between states is called a nexus. So the physical presence is very clear. Even if you don't have an office, you have an agent. If you have a property, you still require to collect sales tax. So with the physical presence, if you have salespeople, if you contract labor, if you have company representatives, if you own or lease property, if you promote or advertise your products, if you participate in a trade show or exhibits, there are additional lists which every year it's growing. The definition is growing. So these actually create a nexus, a relationship. Nexus is a relationship between where your business is located and where your customers are, or where your sales actually happening. So this actually create a nexus. So generally speaking, a seller must have a taxable nexus in a state before the state can require the seller to collect and remit sales and use tax. Before you start collecting or registering to collect taxes, you need to have a taxable nexus. So you have to watch what you're doing. Do you have agents in that state? Do you have any kind of connection with that state? The physical, we just saw what kind of activities actually create nexus. So right now, the definition of nexus from what we see is it is a link, a connection, or a contact between political jurisdictions and the taxpayer. Between political jurisdiction means the seller is located in Texas, the buyer is located in Texas, the seller is located in California. There is a connection between these two states. So this is what is called the nexus. So nexus determines whether or not a company has to register and begin complying with the state tax law. So once the connection is created, then it's up to you to know to what level your connection is and what requirements that state actually needs to make a registration and to comply with their tax law. So some states have a definition of what is sufficient nexus. Sufficient nexus means it is a threshold. Some states actually have a threshold of 200,000 sales, gross sale, and 200 different transactions. This is over the board, most states actually follow. Some of them are or 200,000 or 200 transactions. Some of them are 200,000 transactions, 200,000 gross sales and 200 transactions. Some states actually, they don't even consider sufficient nexus. Once you have one transaction, they think that you have nexus. So this actually different from one state to the other, which we need to consider, make sure when we have a connection, are we understand what their threshold is and make sure our document is intact to understand our connection to what level it is. So Nexus is established when an out-of-state seller has more than a minimum physical presence in the state. Now, two different concepts here. When you have a physical presence, still you might have nexus. But when you have nexus in a different perspective, when you have an economic interest in that state, it is more of a transaction. You don't need to have a physical presence. So the nexus creating activities, we see the physical presence activities. Now we're going to look to nexus creating activities. When you have multi-state location, maintenance, service, repair, own or lease property. If we host data center, for example, some data centers, if the cell is passed through that, they actually have a connection. So that's a very important thing. Some they call it a cookie tax. Cookie nexus. Some have click tax. So if you have your data center is in one state and you make business in the other state, still you have a connection with the state. So let's make sure that's understandable. And we have service staff, license, royalty, if we collect royalty or fee, online direct and online sales, if we maintain inventory, if we are acting as agent or affiliate, if we have trade show, commission, if we collect commission, if we have investors or board members, if we do marketing, if we have drop shipment. Drop shipment is a very important point. So if a sale is happening and the company actually delivers the goods by its own truck, now they create a connection. But if the buyer actually go to that state and collect, then they have to pay the sales tax to where the physical presence of the seller located. So drop shipment is also very important to understand. Now the new concept, which is nexus based on economic presence. This is actually coming, the state of South Dakota actually tried to collect from online sellers, and this was challenged by the company called Wayfair. Wayfair is a furniture store, a furniture online seller. So Wayfair actually don't want to pay the tax. They don't want to collect the sales tax from their clients. So this case is going to the Supreme Court. This actually a very important decision by the Supreme Court to change the whole concept of sales tax from what it was previously. Previously, it is only physical presence or physical connection is a reason to collect sales tax. But since Wayfair, now states actually start collecting taxes from online sellers, regardless where they located. So since 2018, this became a new concept, and every state pretty much adopted this law, and they start collecting taxes from remote sellers. So the reason it has been overturned, the physical presence, is because these remote sellers actually exploit their market in this out-of-state market, because they are competing with those businesses which are located in different states. So they are actually collecting taxes. So the online sellers actually charging cheaper. So people actually move to buying, commercing, transacting in the online setting. So one of the basic ideas of business is to be fair to different sellers. So this law is adopted in 2018, and it's called Wayfair. It's named after the business which was actually sued by the state of South Dakota. So this was achieved without physical presence. It might be solicitation or advertising by mail, or licensing of intangibles by in-state licenses, which pretty much mean remote sellers. So the first state which adopt is Alabama and South Dakota. Actually, the taxes, it was enacted in 2016 and challenged by Wayfair and go to the Supreme Court in 2018. So several more states actually now enacted this similar Nexus standards for sales tax. Now let's define what a remote seller is. A remote seller is, it doesn't have a physical presence in a state, but which sells products and services for delivery in that state. So many states, as I say, enacted this Nexus law for remote sellers, and they collect and remit sales taxes to these local governments states. And as I said earlier, they require threshold. The state of South Dakota, which actually started this, have the 200,000 and the 200 transaction. Most states, as I said earlier, have that or less. It depends from one state to the other. It's very different. So before you become a remote seller, you need to require registration. Those thresholds, those threshold amounts actually require you, once you hit that threshold, you need to start registering and collecting. So these remote sellers are divided into two. One is marketplace sellers. For example, a company has its own website and it sells its products through its website, or use another company fulfillment service. It's called a marketplace seller. So these marketplace sellers, they contract with these facilitators or marketplace providers to sell their products through their platform. This is the new approach to assert Nexus over retailers by using a platform to perform fulfillment service or retail through a marketplace. So this actually depend on your business may be registered in one state and you might have inventory in other states. So immediately that state, you have Nexus. And when you sell from that state to the other, it might be consumed in where the inventory is located. This is called, even if you are a marketplace seller, you are in a state. And when you are selling out of the state, you are called out-of-state dealer. So these marketplace sellers, they might use marketplace providers like Amazon fulfillment services. Now let's go to marketplace providers or facilitators. Companies like Purpose Black, Amazon, Walmart, eBay, Etsy, and others. The list is a lot. Right now, even social media like Facebook, Instagram, they're actually using their platform to sell things. So all these companies called marketplace providers or facilitators. Now it gets, I'm just trying to highlight here, you used to have a retail store. You just sell in one state. It grows when you cross the border from one state to the other. Now you have a nexus. When you cross, you have another sales tax for a different sales tax. Then it grows from different products, have different sales tax amounts. It gets complicated a lot. Now, in the definition of providers and facilitators, all the states have a different definition of what a provider is and what a facilitator is. Some call them provider, some call them facilitator. Anyway, these companies actually have a contract to sell products for sellers through their physical or electronic marketplace. Electronic marketplace like internet or e-commerce. So these online marketplaces, they actually sell their products on behalf of third-party merchants. And they are actually selling items which is taxable. So when they are called, this is the very, which actually the definition which satisfies at least many of the states. When you have these activities, you are actually a marketplace provider. If you provide a primary contact point for customer services, if your customers actually call or contact for any reason, it might be return, it might be refund, it might be exchange, different reasons. It might be complaint. If you handle all these customer services, you are actually a marketplace provider. If you process payments, the payments coming, you collect the payments, you remit the taxes for you remit the payments for your clients or the marketplace seller. You are a marketplace provider. If you manage inventory, if you have a fulfillment service, if you provide that service, you are a marketplace provider. This definition is the minimum requirement. The list is a lot, but just for now, let's understand a marketplace provider is different from a marketplace seller when he meets these three things. So now this marketplace provider, if they act as an agent of these companies and doing this, now they have Nexus in other company. Now the question comes, who is collecting the sales taxes? Earlier, we said that sales tax is paid by the seller, and the seller is making a contact with an agent, with the seller physical location, probably get his inventory by the company truck. Now they have Nexus, we say that earlier. But now this actually getting more complicated by making the provider collecting the sales taxes. So who collects the taxes? This is different from a state to a state, but these are the minimum conditions which require to call one is a marketplace provider. Okay, as I said earlier, this Nexus requirement is very, very complicated. So some initiatives are started to make these things very easy for the providers and for the business people who make sales across the board throughout the United States. So there is effective date too. Some of these Nexus laws actually effective through 2019. Most of them are. And if you want to see when they are effective, you can visit this website, streamlinesalestax.org. This streamlined sales tax and use tax agreement is an agreement between 23 states to standardize definitions. For example, one state have a definition of one thing and the other state have a different thing. You really get surprised when states have different rules for products. I just want to give you an example just for you to understand. For example, a bottle of water. In North Dakota, if it is bought from a store, it is not taxable. If you buy it from a vending machine, it is taxable. In New York, if it is carbonated, it is taxable. If not, it is not. If it's in Virginia, it's a reduced tax. In North Carolina, it's exempt from the state, but not from the local. You still pay taxes for the local sales tax, but not for the state. For Washington, Minnesota, it's always taxable. So one product is different requirements from one state to the other. Another very interesting thing, if you buy a donut in the state of New York, if you buy less than 5, you don't pay any taxes. If you buy more than 5, which is 6 plus, you pay taxes. So it's very, very complicated. So this initiative starts to standardize these definitions and tax rates and everything to make it easier for sellers. And it's a voluntary, so far only 23 states are applying and making easier for sellers. They have the filing portal, which means you go to one place and you can file all these 23 state taxes. If you have Nexus in 23 states, you can just make your payment there. If you don't comply with their laws previously, there are some amnesty they give. So it's a good resource to consider if your sales is Nexus. Now, I want to go to how we manage sales tax. This is just a 5-step to make it easier for us. We overwhelmed by this as a business. Our purpose is to make profit, to give service. By collecting sales tax, businesses, they don't get anything. They just comply with the law. The state actually provides you a license, which is a privilege to make money, but they want you also to collect the taxes for them. So it is just an additional burden for the businesses. So we have to make it easy. The first step we have to know is we have to know where our business is. If we have a physical presence, that's very easy in one state. But when we have an online setting, it's very, very hard where we are selling. We have to collect addresses. We have to collect, when we ship, we have to know which state, which locality, what tax rate we are charging, whether that product is taxable or not. So this is the most important thing to know. So we need to have a document. We need to have a system how to make it easier to know where we are actually selling. The second is, once you know in that state you have a Nexus, you have an economic interest, you make sure you have to register and start collecting and remitting sales tax to the state. The third step is to calculate correctly. The fourth step is to track and manage exempt sale. The fifth step is to remit sales taxes to the authority. I need to explain this more. I think we say a lot on this one. We have to be up to date with the law changing from one state to the other. Every year, these laws are changing. One state changed their law, so we have to make sure we are actually up to date. As I said earlier, we have to review our business activity, whether we have Nexus, whether we have established an agent, whether we deliver our goods through our trucks. So it is from physical presence, delivering your truck, to selling through online means. Step 2 is to register and collect and remit taxes. This is you need before you actually collect sales taxes, you need to register in the jurisdiction. Before you register, you make sure you have the threshold. If you have a minimum connection with that state, probably you are not required. So we have to know that. So to register, we need what kind of business we have, our business name. When did our business is formed? The driving license of the person, an acting agent or owner of the business, social security number of the person, state EIN, state registration, business registration number. We need that. We need the NAICS code, which is a national industrial code, which is for products. Our projected monthly taxable sales, we project ourselves, and we have to know, we have to tell the state probably we will collect this much. We have name and contact of the members, the partners, and everything. The federal ID number, which is called FIN. We need to have these items before we register our businesses. Step number 3 is calculate and the correct sales tax. As I said earlier, about from 10,000 to 12,000 jurisdictions, they have different sales tax rate. So we have to make sure we are actually calculating the correct sales tax. We don't need to rely on zip codes. They are very confusing. One zip code may have shared by 2 different localities. So that's very difficult to know. So we don't need to base our tax rate by zip code. We need to have some solution to quickly charge a correct rate. We have to track and manage our exempt sale. As we explained that earlier, who have these exemptions. If we, for example, if we sell an item for a company or for charitable or a state or a government, and we don't have the document, when we are audited, we are on the hook to pay the sales taxes. So if they are saying that they use this product for resale purposes, we need to have an exemption. Without those exemption certificates, we actually be in trouble. So we make sure we have those exemptions and make sure we document that and use that when we actually make sales. The exemption certificate from one to the other, it's very different. It's a different scenario. Some only want a 501c certificate. Some actually need a certificate by statute, which means the company or the non-profit has to be registered as a non-profit in the state and given a certificate which is renewable every year. So we have to make sure we have that, and we need to require every time when it expires. So we need to process the requesting. We have to process the request for sale. They said, oh, we don't want to pay sales tax. And we have to process that. We have to validate, and we have to store the certificate. The last but not the least is we have to give the money to the tax authority. It's not our money, it is the state's money. We have to remit. When we remit, for different jurisdictions have different ways of remittance of their sales tax. Some they just want paper checks. Some want check by probably by phone. Some want ACH. Some want EFT. Different ways. Also on the due date, some want if you send your payment by mail, they want to make sure you actually postmark it by the due date or before the due date. If you pass that, then you have penalty to pay. So when you actually file our sales tax, we have to aggregate the data. One of the complications here is, let's say, a marketplace seller have a website, have a store, and also have used a provider. In this case, let's assume the provider actually collects sales tax for products sold by the provider. The seller has to collect sales tax for different jurisdictions where he make sell through his own website as a marketplace seller. Also, he have a physical location where he collects sales taxes. So these three different things. So our filing has to indicate all these three. For the items we sell in our physical location, we have to calculate taxes, and we are in the state for that purpose. When we sell through our own website, let's say as a marketplace, then we are required to file regardless of the threshold, if it is in the state. When you are selling out of state, now you have to consider the threshold. Some states require you, the threshold is the combination of sale through your provider and sale through your own website. So this actually very complicated. We have the four different states have different forms to fill in. We have to make sure we have to identify what actually sold through our means. Most items sold through a provider and the sales tax is actually collected by the sales tax provider. The seller is not responsible to report that. They just has to say this kind of product is sold through the marketplace provider. Okay, these are the five main managing of sales tax. Now, when you manage, you have sometimes have common mistakes, which is overseen by different sellers. So if they fail to file a return, if they fail to report sales, let's say when you fail to return means you don't file at all. When you file to report sales means you partially report sale. When you have taking excessive credits, some states actually give credit for the vendors or the sellers for collecting sales taxes. In Virginia, for example, if you have sale and you have a credit and actually you get money by just reporting. Mistakes found in a previous audit, so that has to be corrected. Previous findings on exemption certificate misuse, if we misuse our certificate, and not reporting use tax. In this, we need to be remembering that even if we sell a product and we are not required to collect sales tax, we need to report for the state that we are selling. Some states actually require this, not all of them. So that the state know that there is a use tax. Now, with these all complications, the place, the where we selling, what we selling, and who we selling, we need to consider technology to achieve all these benefits of automation. If we automate sales tax, when we have, it doesn't mean for everybody. When you have just one location, probably you need to hire one dedicated person or contract out that to some sales tax CPA firm or accountant. When you have multiple, then probably you need to automate that and link it to your system. For example, if you are a retailer, you can automate with your POS system, cash register system. When you have like accounting softwares like QuickBooks and others, then you have to automate that inside the QuickBooks. And then when you have more than that, when you have multiple states, multiple products, if you are a provider, if you are a marketplace seller, if you have Nexus, I think the best way is to automate through software, which is a cloud-based software in the market. And we have this advantage: compliance, saving time, cutting costs, accuracy, avoiding risk, efficiency, profitability, and we focus on our business. Our business main purpose is to make money, to give service, to sell goods, not to collect taxes. So we need to outsource when it's hard to manage to companies which manage sales tax. So these are the benefits: accuracy, efficiency, risk, customer satisfaction, and business growth. With that, I conclude my I conclude this session. Thank you. I will open for questions now. Thank you so much.
Well, thank you very much, Mr. Tedros. That was very helpful. I am really happy that you have raised really pertinent issues for Purpose Black and its vendors. I'm sure we all need to have these crucial informations. Especially, Teddy, I like to stress that your cooperation with Black Economy Excellence and what you are doing is so much appreciated, and thank you. By the way, there will be no training for the next 2 weeks because of the Christmas and New Year holidays. The next training will be on January 9th on Saturday at the same time with a topic what to consider yeah, with a topic what to consider for reporting on personal and business tax. Now we will go ahead and take the questions from our participants. Just a reminder, please be sure to type your questions into the question box in your control panel. In the meanwhile, please feel free to give us your reviews on the forms provided. It will help us to improve ourselves and serve you better in the future. We have few questions. The first one I get is here. What is the sales tax requirement for Delaware? And if we are in Delaware, are we required to get exemption certificate? Teddy.
Okay. Delaware is one of the 5 nomad states. We call them nomad states where sales tax collection is not required. In that state, you don't have to pay sales tax. But if you based in Delaware and if you sell in, let's say, in Virginia, now you're required to collect sales tax. Delaware as a state which is very loose tax and regulations for businesses, which is pretty much most businesses locate there is for benefits of federal, for their courts to make it easy when they have problems and stuff like that. But on sales tax, the state doesn't collect sales tax. That's one thing. If you live in Delaware, if you buy stuff in Delaware, you don't pay sales tax. As a business, if you locate in Delaware, you have benefits, some benefits, but you still pay sales tax for goods and products which you ship or sell in your platform to other states. Only these 5 states, they don't have sales tax. I just want to repeat that. That's New Hampshire, Oregon, Montana, Delaware, and Alaska. But Alaska have local sales taxes. If that answers my question, that's good. If not, I will explain more.
I think there are more questions here. For example, what is the threshold, for example, in Virginia?
In Virginia, if you are outside seller, you have 100,000 in annual gross sale, or 200 or more transactions, which means or either the total of your gross sale has to be 100,000 or it should be 200, either one. So in Virginia, it's actually start July 1st, 2019. And this is for remote or online retailers.
Okay. The other one, Teddy, I have is if I am a vendor on Purpose Black or Amazon, by partnering with dropshipper, am I expected to collect the tax as a seller, or is it going to be Amazon's or Purpose Black's responsibility? Or is it the dropshipper responsibility to collect the tax?
Well, now, first, are you selling in the state where it collects sales tax? Then the answer is yes. Okay. The seller is in one state, but the buyer actually pay taxes. Now the question is the buyer, we collect sales tax, the buyer from the provider, the drop shipper, or the vendor? This is the question, right? Now we have to look different states. Some states require, if you are a provider, most states now follow this rule. If you are a provider, like Amazon, like Black Purpose. Black Purpose and Amazon actually require to collect sales tax. What first, they have to make sure their threshold is satisfying that. If it is the first ship, if you as a vendor, you just did this the first time, most states have this threshold. I think there is one state, I'm not sure, I don't have the name of the state, but that there is only one state doesn't have a threshold. Now, if you satisfy the threshold, what is actually the provider is providing you? Is that just putting your stuff for advertisement? If they take care of your customer service, if they collect payment, if they ship your product, if they do all that, the provider is on the hook to collect sales tax. If they are not collecting, in your agreement as a third party, you are on the hook. The drop shipper, sorry, the drop shipper also have a contract with you. What's your agreement to collect sales tax or not? So this thing has to be discussed. This thing has to be make sure each state requirement match to that. But in this case, if you just give your product, you're selling your item through a provider marketplace, but everything is done by you, the vendor, you is collecting sales tax. The shipper, it is a shipping company. A shipping company contracted by you, you are the one who actually collecting sales tax. So it is between you and the provider, depending on which state and what threshold you are actually selling.
Okay. I have the other one. If you are an individual marketplace seller in Oregon, for example, and your buyer is from non-exempt state, do you collect tax? And where do you file your tax?
If you are in Oregon, if you live in Oregon, and if you sell in Oregon, you don't collect tax. Oregon is, you don't really, no sales tax. But if you are based in Oregon and sell the item, let's give an example. If you sell in Virginia, the first thing you have to look is your threshold. Once you satisfy your threshold, you have to pay your sales tax to Virginia. You are not only required to remit payments, but you have to register. They have to know actually you are an economic interest in the state of Virginia. So if you are a seller, let's put it this way. If you are a seller, regardless of where you're located, you have to collect sales taxes in 45 states and District of Columbia. If you are a buyer, you live in these 5 states, you don't pay sales tax. So that's the definition of presence in the Nexus. When we look, if you live in one state where sales tax is collected and you buy stuff, you are paying sales tax. Who is collecting? Now the question is the seller, which is located in where there is no sales tax, is collecting sales tax required by the seller. So everything has to be destination based. We are collecting these taxes from customers, induced customers. So they are paid. These people who are paying sales taxes pay you to make that payment pass through to the state. So to make it easy, don't look the no sales tax collection states. Just look where you are actually selling. Out of those 50 states plus Washington, D.C., you are selling in 45 states, you are required to collect sales tax.
What is the first step to get the tax ID?
Okay, that's a good question. In a previous session with my partner, Nagga, he actually make an explanation when you create a business, what you have to do. The first thing is you have to be licensed to do business. Once you have different business entities. If you are, let's say, if you are an LLC, you have to register to have that LLC requirement. So you have to register with the state. Now you are telling the state, okay, I'm starting my business in the state. So they give you their ID or they give you, they register you as a business. Then you have to register for federal ID to get EIN number. So once you register, you have to find out by checking or consulting with the tax accountant what requirements you have. Let's say if you're providing service, let's say the service required to register. Let's say I'm a CPA, I'm required to register in the state if I have to do business. So that's one thing. If you are like, let's assume if you are a nurse, you are required to register with the state. Now, if you are a retail, you have to register with the state for collecting sales tax. That is another requirement. Let's say if you hire an employee, you have to register as an employer in the state. So for different tax purposes, you have to register differently. But once you establish your business, you already register your business. So you go to your account, you just add that, you start collecting sales tax. If I answer these questions, if not, I will go more.
Yeah, thank you very much, by the way, Teddy. You are explaining very well. Let me get this another question. How often is use tax paid?
Use tax, as I said earlier, it is if you have inventory. Let's say if you are a manufacturer, you buy stuff from a company, so you are not for resale purposes. Now, as a manufacturer, you're going to use that product. Now you are on the hook to pay use tax. The other thing is when the seller doesn't have Nexus in your state. In my example earlier, I'm going to share the screen just in case. Okay, in this case, the buyer is in Texas, the seller is in California. The buyer bought the product in Texas. Let's assume he bought it through marketplace. They do if that doesn't satisfy the threshold, now there is no Nexus. But the buyer now have an obligation to pay use tax. So use tax is a complement to sales tax. When you are not paying sales tax, then you have to pay use tax for consumer products, for manufacturers. A more definition of use tax here, it is for storage, use, or purchase of personal property, which is not covered by sales tax. If sales tax is not covered, then you have to pay use tax. If you, for example, rent or lease something, then you have to pay use tax. It's not a sale, so now it's the use tax. So it depends on the scenarios. First, it can be a consumer, which he didn't pay any sales tax, then he's required to pay use tax. Now he's using, that's why he's paying tax, not because he's actually buying, he's using. So pretty much the rates, use tax and the sales tax rates are the same, but they are actually, when it's not a sales tax, it is the use tax.
Okay. Are they are there softwares that help you to calculate everything, telling you what and where to collect and complete payments?
There are many softwares in the market. The industry leader in the sales tax is called Avilera. I'm not advertising for them, but just I'm dealing with them. That's why I'm just saying. But there are different companies which actually integrate with your accounting system, with your cash register system. You have to reach out and make sure uh, they actually satisfy your needs if they are good enough for the fee. There is one thing I just want to advise. If you actually sell across the board in many states, to use that streamlined sales tax, the website I just shared earlier, that is very free. It is a free for 23 states. You can access everything in there. It's really advisable to use. So actually, when it's free, it doesn't mean it is just the state doing your taxes, but the state actually contracting out to these companies, which provide sales tax calculation, remittance, registering, everything. So they try make um, uh, sellers make it to make it easy for them. So there are different companies. Uh, I probably don't have any other name from out of my mind right now. If it's necessary, I can provide my email address. I can share with you if that's important. Thank you.
Sure. Please, you share us the your email address on the chat box. That will be helpful. And the other question together with this is, how about international business transactions, especially tax requirement, if you are selling outside um outside the country? I mean, outside.
That is a very important question. I'm actually, I think I don't have enough time to cover. That's why I didn't actually include it. And actually, uh, the session, the content is about sales and state and local taxes. It's not international tax, but it's very interesting to know. So when we sell products to different countries, it is another headache, but it is a little bit easier because customs is the one which actually manage these things. When we sell products, we have to understand the country's uh, sales tax regime or sales tax laws so that we don't surprise our buyers that the goods come with more taxes because they don't know where it comes from, what kind of taxes actually paid for that country. Let's say if you ship something from here to France, you are required to pay France's sales tax if they have sales tax. Probably they have, but it's not called sales tax. Usually it's called some excise tax or something, VAT, different name for different countries. So it is easier because it is handled by customs. The important thing is to make the sellers, the buyers, know that it's their responsibility. When they go to customs, they are the one who pay and collect their products. Our task is just to ship the product. So this is a little easier, but at times it is complicated when countries collect big taxes. Now, let's see. We said Purpose Black have a plan to go to Africa. It is very hard to know 54 different countries have different rates. So sometimes it is cheaper to buy Purpose Black's product, let's say in Ethiopia, and sell it in Kenya, if Kenya have more taxes. So we have to see these scenarios before we actually going out of the country. I'm not an expert on this. Probably it's better to reach out to um, other experts in this area. But this is very interesting and it's very different from what we actually have here in the United States.
Just to clarify more on this is from the buyer's country perspective, but what about from the sellers if the seller is here in US? Is there any sales tax for
You are
products.
shipping from here to,
Yeah.
okay. You are shipping from here to any country. There is no, I mean, you are not selling in United States. There may be other taxes, which for you selling your product to outside of the country. It's not called sales tax. It's not part of use tax or anything like that. But now we are talking here from the perspective of sales tax.
Okay.
The sales tax is collected in different countries. Probably some countries they don't have. So from buyer's perspective, they have to pay that to get their products. If you are a seller, you have to understand uh, what taxes are required to pay for selling items outside of the United States. I'm not familiar with that at this point, so I cannot give you more things. But what I see from sales tax point of view, different countries have different uh, laws, so it is actually in customs. When the product is shipped, customs hold that and collect any tax needed before releasing the product to the buyer.
Okay. If you have already started collecting tax from buyers and at the end of the day, your threshold is not met, what do you do?
No, you don't collect taxes before you reach to the threshold. You have to reach the threshold. Once you reach to the threshold, then you have to remit your taxes. First, the threshold is not only for remitting, it is for registering too. So you have to register in the state. When did you register? When you have sufficient connection, sufficient nexus. Otherwise, you cannot collect taxes. But in case, let's say you wrongly collect, you have to go to the approach the state and you have to provide that. You have to tell them before they audit you.
Okay. Thank you very much, Tedros. Do one pay tax, sales tax if he or she buys from overseas seller?
Now it is the reverse of the buyer is in the United
Yeah.
States. The same
When the
thing.
buyer is
You
here.
go to customs, yes. When you go to customs, let's say, if you, when we let's just say something. When you ship, uh, even through mail, some places they charge you taxes, right? So as a buyer, I know I'm familiar with one of my clients who actually ship injera from Ethiopia to the United States. So his taxes is collected at the uh, it's shipped through Ethiopian Airlines, so he's taxed. The tax is not called sales tax, but he's taxed. It is
A different
custom
tax, border
a
tax.
custom. It's called custom tax. Yes. Yep.
And do you pay sales tax to states, cities, and counties at the same time?
Uh, okay. Sales tax is paid to states, local governments, which is municipalities, counties, towns. They have their own law, but collection is through the state. The state actually add the local plus the state tax and collect and remit back to the states. The states, I mean, back to the localities. For example, in Virginia, as I said earlier, uh, the there is different tax jurisdictions. Some of them charge 6%. Some of them charge, for example, Northern Virginia is 6%. Halifax County is 6.3%. Out of this 6%, 1.5 is for local taxes. So it is the combination of state and local taxes and paid to the state. In Virginia, it's 5.3, for example. The state rate is 1. It is the same. But the localities have different rates. So let's say in Northern Virginia, you pay 6%. If you go to historical triangle, it's 7% total. If you go to Halifax County, it is 6.3. So it's a total of the state and the local taxes, but paid to the state. The only state a little different in here is Alaska. Alaska is the normal state, which means no sales tax is collected in Alaska for the state. But the localities actually collect sales tax. So when it comes to Alaska, you are paying to the localities. I'm not sure whether it's paid to the state and distributed to the counties because I'm not familiar with that. But Alaska, the state doesn't have any tax. The localities have.
If you want to outsource sales tax, how does it work? Any general information?
The general thing is, I think before automation, this is my advice. Before you automate sales tax, you have to see how complicated your taxes are. If you are selling one state, if you are selling two states, let's assume, it is probably easier to contract out to your accountant or specialized in sales tax. They manage easily from your reports, sale reports, and provide, they remit your taxes. I have a couple of clients on that. They are based in Virginia, they are selling in Virginia, no complication. When you have multiple different states and your threshold is bigger, then it's a risk. You are actually taking a risk by actually selling and collecting the sales taxes. So I cannot just tell you need to contract out or something, but you have to see your volume matters. How many places, the where it matters. Who you selling? Are you selling to everybody? For example, your product is needed by churches, by non-profits, by businesses, by wholesale distributors, and you are selling through a provider. You are selling through your own website, marketplace. You are selling in a physical location. Now you complicate it. And when you sell different states, you have different rates, different exemptions, different rules. This is the issue with sales tax. So I think at this point, give me 1 second.
Thank you very much, everyone. I think it looks like we have covered all the questions forwarded. Thank you very much, Mr. Tedros. You have really explained well. And yeah, Teddy, do you like to add anything before we wrap up?
I first actually appreciate the chance. It's a privilege to discuss about this. This is a very complicated and very hard for everyone, even if these experts, they cannot be an expert in every state. So it is a privilege for me to be here. If anyone have any questions, I'm gonna post my email address. I will answer as much as I can. Thank you for the opportunity. I really appreciate the time. Thank you.
All right. So great. Thank you, everyone. We appreciate you for being here with us today. We have the coming next course webinar at the same time on Saturday on January 9th. We will be dealing with another topic in regards to tax returns, the individual and business taxes. So you can go and register on our website, www.blackeconomyexcellence.com/GCDI webinars. And you can invite others too. So please do. Thank you all and see you next time. Thank you very much.